Hi, my name is Moira Tran and I'm a Top Shelf Financial Model Analyst here at Top Shelf Models. Today we will be talking about gross sales proceeds. So just a quick overview of the video. First, we're going to kind of define what gross sales proceeds, give you the definitions there, and then I will be teaching you how to calculate it. And after, I kind of give you the general formula for that, we're going to go ahead and go into the model and I'll show you how we do it here at Top Shelf Models. So, gross sales proceeds. First, we're going to discuss what sales proceeds are, and this is just the amount of cash received from the sale of a good or an asset. Typically, these sales proceeds are discussed as either gross or net. So, gross sales proceeds are the total sales amount received from the transaction, while net sales proceeds are the total sales amount after paying for expenses, fees, and taxes. So, let's go ahead and discuss gross sales proceeds versus net sales proceeds. Gross sales proceeds are the payment received for selling an asset, whether tangible or intangible. This amount could include expenses related to the transaction, the cost of production, or other costs. For example, if a home is selling $250K, this amount would represent the gross sales proceeds. The gross sales proceeds of the home includes the selling costs, so maybe legal and title fees, as well as any other agent fees or commissions. Net proceeds, on the other hand, are the final consideration that the seller receives after deducting all costs and expenses that occurred during a transaction. Depending on the asset sold, the cost could be a small percentage of a very large percentage. It could also be the difference between the original purchase price and the sale of an asset. It just kind of depends on what sort of costs you have there in your model. For example, when selling a house, the first cost that is deducted is a success fee, and this is just a fee paid to the real estate agent for the successful sale of a property.